Well, hello, and welcome back to the educational systematic trading videos. Today I'm going to discuss one crazy day trading system for lazy people, which is going to be up even 46% this year. Okay, but before I go down that road and talk about the rules and everything, let me show you quickly a disclaimer that I'm not a financial advisor, and whatever I say, take it with a grain of salt. This is my style of trading. Doesn't mean that you have to follow exactly what I do. Do your own due diligence. Okay? Now, here's the idea. Why I even decided to come up with this system. I really don't like the idea of sitting in front of the screen all day. I tried day trading for quite a while. I've been doing it since 2019, so I've been doing it for quite a while up till now, and I know what kind of emotional toll it takes on me as well. So I want to make sure that I don't have to sit in front of the computer and can do whatever I like. Just enter my orders in the beginning of the day and just walk away from the computer. First of all, it has less temptation for me to overtrade, and it has less temptation for me to go crazy. And I used to sit over there. There's a chair. You might not even see it, but over there, sitting and sweating before the market opens for the day trading setups. Here, no need. You just enter everything before the market opens and you walk away. And at the end of the day, you just check the results. Okay, that's the main idea for that system. And then another thing is that I also trade a lot of overnight systems for my personal account. So this way, it's yet another system which does let me to trade in a different manner, not the same way that I usually do. Okay, so it provides a non-correlation, which I'm always looking for, because it's always about the combination of systems, not just one single system at any point in time. Now, before I go into showing the curves, let me just really dive into the rules. Very simple rules. Well, simple in my opinion, may be difficult for you to comprehend, but I hope you can understand it. So let me just decipher a little bit. First of all, it's a universe of stocks. It's S&P 500 stocks. We're talking about only S&P 500 stocks, so only well-known, established names. Okay, but even though they are well-known and established names, they still have a lot of stocks which do not have enough liquidity. That is why I have the volume as my liquidity measurement. And at the same time, I want to make sure that I am playing with the stocks which are part of the institution's participation. So I want to trade something which is more than $10. Okay, that's the reason for these two rules. So reducing this universe to only these stocks really allows me to work with a little bit tighter set of stocks. Then I also want to make sure that the stock at least did not lose money over 1 year. So I'm checking, so over 1 year as a rolling window, it made at least 5% or more in the price. So whatever the price was a year ago and the price it is right now, it has to be at least 5% or more. But then the stock itself has to be moving around. So which means that it has some current move happening. So it either goes up or down, it doesn't matter which way. For me, it's important that it has some kind of a move. So ADX is the indication of whether or not the stock is moving around. Because ADX is directionless, it doesn't know if it goes up or down, it just says the strength of the move. That's the reason for the ADX for 5 days to be above 30. It gives me the stocks which are moving around. But then, the most important part is, in a very, very short term, over 2 days, RSI is below the 20 threshold. Okay, so that way we're saying that these are the candidates which are my oversold candidates. Their institutions are participating. It has enough volume. It did over the longer period, over 1 year, it didn't lose money, which means that it's probably an uptrend as far as the stock is concerned. But it has a very short-term dip. But once we have these candidates, we don't just open the very next day and get into this candidate, because you still can get into some random candidate per se. So this way, I want to make sure that I enter only if during the day it drops at least 4% below the previous closing price. Only then I'm going to enter. That's the rule for the order type. It's a limit order, and it's a limit order at least 4% from the previous closing price. And then my ranking candidates, meaning that I have, let's say for the day I have 20 candidates. Out of all that, right? 20 candidates which are eligible. Well, which one do I enter? I cannot enter all 20. I can only enter into 10, which is my position sizing. But because I don't want to exceed my margins, right? So because of this, I need to sort them up or down and choose the ones which are the most appropriate for me to choose with a secondary means. So in this case, I'm using the highest ATR percent, which is the volatility measurement, which means that these are the stocks. Not only they're moving, they have highest volatility out of all the stocks that are candidates for me for the day. So this way, I'm not entering just some duds or something which is kind of moving around but not maybe enough for me. So I'm going to enter into the highest volatility stocks. And I checked if I choose other kind of ranking, this is one of the best ways to actually rank the stocks. Okay? The position sizing sounds a little bit complex, but that is why I usually go in more details in webinars and in workshops. And the closest workshop, which is the paid workshop, I want to warn you, is coming up in June 13th, which is in 10 days from now. You're welcome to join it. I will go into day trading systems over there actually, about 4, but then I will be discussing about 20 different versions of them and deep into every single the indicator or every single rule. So you can join that workshop, and then we will talk about the position sizing as well in more details. Otherwise, if you know what the volatility sizing, it uses volatility sizing with 1% of risk. Okay. Now, what are the exits? It's as simple as it gets. As soon as our limit order triggers, we're going to exit as market on close. That's all. So if you know how to work with your brokerage account and how to set up your orders, you can immediately set up all your limit orders to have the bracket order, which is the market on close, or you can as an alternate behavior for you, if you don't know how to do that, you can just, let's say 10 minutes before the market closes, check whichever ones got triggered, and if they triggered, you just issue the market on close for them, so they will immediately close upon the market closing. So this way you don't have to time it to click the closing button, it just closes automatically as market on close for the time. Now, here's the result. And you can see that it's very significantly producing system. I mean, it has, from 2007 till now, it's a longer period of time, it produced on average almost 19.5% of compounded annual growth rate, which is not little. Believe it, it's not little. Some people want to make 100% per year. It's not as simple as it sounds. Okay, and but it still has the almost 3% maximum drawdown, which is the 2011 time frame, and somewhere close to it in 2021 as well, which we'll talk about a little bit later today. And the on average, don't forget the main statistics. On average, it only wins 56% of the time. So it doesn't win all the time. It wins only 56%. And my win-loss ratio is 1.2. Sometimes win-loss ratio can be called as R&R, the risk-reward ratio. We're kind of backward calculating what's my R&R here, so I call it win-loss ratio. And because we're not trying to target specific risk-reward ratio, we're just getting it by sheer statistics. And which means that my average losses are smaller than my average wins. Okay? And now if I go into more details on the yearly basis, you can see that it doesn't have a lot of trades. Well, it's significant. I mean, on average, it's almost like 2 trades per day, almost. Probably more than that, actually. But on average, but it doesn't mean that it fires all the time, fires off all the time. So, but it does outperform the market in specific areas when the market is in distress, quite honestly. Not when it's a pure, nice bull market. So, like 2022, that's the reason for the 2025. And if I look at the monthly, you can see again in 2025, in the most recent scare that we had the tariffs in April, you can see how leading to that, it was already making money. But during the tariffs kind of announcement, it was actually making 24%. It's a long system. Imagine to be so happy making money when the market is in freak out and dropping 20%. Right, so that's a nice way to actually make money. Even in May, it made 2% when the market was already going up. And you can see here that what the typical trades and some of these symbols you may not recognize, like Tesla you may recognize, but Garmin maybe, but some of them you may not recognize. Some of them are there. some established companies, they're also all established companies because they're part of the S&P 500 universe, but still, you may not just recognize some of these symbols, which is okay in our case. As long as they're a good candidate, we're in it. Now, one observation that I did when I looked at this curve, like, how come it has these drops? Well, I looked closer, and you can see that these highlighted areas, these yellow highlighted areas, where it makes money, and usually that happens right before it drops in the market. Like see in 2018, in 2018 at the beginning of the year, at the end of the year, here in 2015 it did the same thing, in 2020 it did the same thing, it did it in 2022 right before the market went into bear market, it did the same in 2025, okay? So 2008 obviously, that's the bigger move over there, but you can see that this system has this interesting characteristic that when the volatility, because remember it's all about the volatility for the trading system, when volatility goes through the roof, and usually it goes through the roof when the market is actually suddenly dropping for whatever reason, or leading to the drop, like in 2025, right? So the other problem is that still that system doesn't guarantee that it happens every single time. Okay? It can happen most of the time, but not every single time. That's the reason why, like in 2011, it was just catching the falling knives. Even though you can see how the 2011 was forming before it dropped, that this system was already making money, right? Because it was stalling. That's the sideways market, by the way, right there. Before it actually dropped in 2011 and then corrected and then went up again, which the system did as well. But just to give you an idea that don't just assume that it's going to work all the time, okay? Which leads me to the conclusion. Can this system make money in the bear market? Yes, it can. I just showed you. Literally is designed kind of to make money in the bear markets, actually primarily, doing the huge leaps of equities in bear markets. Can it make money in the bull market? Yes, it can. But you see that it doesn't make it as much during the bull markets. It's just because, again, every single bull market, unless it's completely calm bull market, has some kind of a correction happening during its lifetime. So during those corrections, it's going to make money. Now, can it make money in the sideways market? Yep, as you saw, like in 2011, it was going sideways, so it was actually making money during the time. So the key theory, though, here is, can you trade by itself as a system? I would caution you to not trade just that system and have a variety of different systems, because yes, it trades nicely during the beginning of the bear markets or when there's some kind of a scare going on, but that doesn't happen all the time, right? So you may experience something like 2011 where the market was just very calm bull market going up, continues throughout the whole year. When the volatility is up, that's great, but when the volatility is calm, then this particular system is not going to make money. Most likely it's also going to lose money. So because of this, you need to have a variety of different systems. So does it have specific characteristics that you need to be aware of? Yes, indeed it does, and that's the reason why you really need to make sure that you don't just trade by itself. Okay, so you need to be aware of what the characteristics are, when it's going to make money, when it's going to lose money, and expect that the statistics tell you that you're not going to make money all the time. It's, like in this case, it's 56% of the time. So it's basically only slightly above the coin toss, right? So, but it just, the way it makes money, it jumps, it does it in the leaps kind of approach. It doesn't just go in slow and steady. It has a little bit bibble, and then boom, it just jumps up. So that's the characteristic. So you really need to be aware what it does. Think of it as like your own child, so that you really know what they do and how they behave to different conditions. Same exact thing here, that you really need to know what the system does to trade it. Now, to wrap things up for today, if you have any questions, write it to info@tradingsystems.com. And especially if you have questions about the upcoming workshop, make sure to check the description and write back to me if you're curious about this more. And then at the same time, don't be shy to leave any comments, put the like, and subscribe to our channel if you haven't done so. Otherwise, I'll see you next time.